We're going to look at those few things that we should always check for. That's why I've entitled it as checklist. We should look at, we should have in our mind, we should always observe, we should always take as precaution before we buy, before we sell. Some of you may consider this as a strategy, but it's not a strategy. Even when it's a strategy, it should entails the things that I'm actually discussing now. So before you go into trading, there is what we consider as the market bias. Sometimes we call it the directional bias. Is the general market movement, is it bullish or it's bearish? So this is important. Why? Because it's going to help you know whether the market is now controlled by either the buyers or the sellers. Through this, it can help you make better decisions and trade the right way when we are trading. So regardless of the strategy you are using, we highly encourage that before you buy, before you sell, whether a scalper, whether you're an intraday trader, whether a novice, whether which type of trader, it is important that you identify the direction of the market, that is the bias, such that we trade in the direction of that market, which we consider as bias. Sometimes when you talk about bias, some of you don't happen, you may not get this the right way, but what we mean by bias is generally the direction of the market. So this is the overall direction you believe the market is likely to move. So it's important to do this because it's the professional precaution that we should all take. It's the lane that we should all take. It's something that we should all do to help us, trade profitably and always move with the market. The other thing is you have to know liquidity. You have to check for liquidity, and you have to check for liquidity because liquidity is where large orders are sitting in the forex trading market. So liquidity is important, and the smart money are always going to trade where there is liquidity. They will place their order where there is liquidity, and the market will always go where there is liquidity. So if you don't first identify where liquidity is, then it's going to be hard for you to profit in the forex trading market. It's going to be hard for you to do analysis. So knowing where liquidity is important. The market often moves to take liquidity before the real move begins. So it first goes where there is liquidity and then further continues to any particular direction. That's why I emphasize that before you buy, before you sell, regardless of which strategy you are using, always check for liquidity in the market. I've released quite a number of videos regarding liquidity, buy side liquidity, sell side liquidity, how to identify liquidity, what liquidity is, the importance of liquidity, among which is now this. It is a checklist. It's among our checklist that we should always look for before we buy, before we sell here and there in our trading. So it's important. Then we have what we consider as market structure. What we initially started with was bias. Bias may s- they may, Bias and market structure may seem the same, but are totally two different things once we happen to go deep. By bias, we're just looking at the direction. Okay. But by market structure, now we're going deep to know which kind of direction, which kind of structure are we having here? Is it a trending one? Is it a ranging one? Now, knowing the structure of the market, it will also help you make decisions better, whether to execute or not, whether to buy or not, whether to go for this particular instrument or not, and of course, make decisions here and there. So, through this, you realize that some of the things that I'm going to talk about are some of the things that you should have in your trading strategies, trading systems. So if you do not have a strategy by yourself, then here are some of the things. Here is a script. Here is the blue. Here is the blueprint. Now we can use to develop our strategies. And I believe I will also create a simple video that we can watch to help us follow and create our own forex trading strategy. Some people focus more onto the strategy, yet it's not the strategy that will always make money for you. Okay, however, strategy is also important here to help us execute and know when to buy, when to sell. Supply and demand. Oh, order blocks. are some of the things that you also need to identify, regardless of whether you're doing price action or you're using indicators generally, or you're trading news. All these things have to be considered. That's why I'm actually coming out now to give you the checklist, some of the things that you should have in mind before you buy, before you sell in the forex trading market. So identifying identifying supply, demand, or order blocks is important, because these are the areas where big institutions place their orders. Again, look for strong impulsive moves, because they impact consolidations along the particular points and institutional footprints along these particular levels. These are all the only way rather you're going to do this is when you can if you can find support and resist, rather supply and demand or order blocks this time round. Volume is important here. Volume helps confirm strength behind moves. So through volumes, we can know where we expect the market to have more of the direction, more of volume. By volume, sometimes we may consider this as this can rather be contributed by either the number of participants in the market or by the amounts of money. So again, this is going to help you now to affirm to you that regardless of the strategy, the analysis, the whatever that you're doing, that it will now confirm to you that regardless of what you're doing, regardless of whether strategy is telling you to sell, volume is in this direction. So volume is key. Don't just come into the market if you don't look out for volume. Volume rising means strong participants, and volume weakening means weak movements in the market. Okay, so once you happen to come to the market and you see the market doesn't have volume, in other words, the market is not active, then it means that you also need to trade differently as compared to the market that has increased volume of participant there and then. So volume can be attributed or can only be seen if you come into the market and the market is generally characterized of small candles. If you generally come into the market and you see small candles, and then this means that the volume is low. If you come into the market and you see big candles, then this means that volume is high. So through this, we can know that we either have good volume or no volume in the market. What you should check before we enter the market is actually key levels. Key levels are important. By this, I'm looking at the support and considering the previous high, previous low, psychological levels, and the daily and weekly levels. These are important. Through this, we can know what our projections are going to be, and where I should place our stop loss, where I should place our take profits, and so on and forth. So you see now the importance of each and every aspect on our checklist that we should always look at before we probably enter the market. Lastly, but not least, I can say you should always look for market manipulation. Okay, institutions often create false moves to trap retail traders. So look, you always need to know if this is probably a trap or not a trap, because if you dare just come in without ideally not ideally spotting or getting to know the traps in the market, that is the to grab the liquidity grabs in the forex trading market, then trust me, it's gonna be hard for you. So you have to be knowing you have to know how to differentiate between a manipulation trap, a false move, and a move that isn't false. So this is something that you should know, and because through this, if you don't pay attention to this, you're going to realize that we have stomp hands, false breaks, liquidity sweeps, and a lot more. So these are things that you should pay attention to before you buy, before you sell in the forex trading market. So it is mandatory that you know the risk to reward ratio you are using as a person who is trading. It's important you know this as well, because we need it. Okay, because we need it in our trading. We have 1 to 2, 1 to 3. Usually this is the ratio of the risk to the reward. That's what we call it RR. So you need to know the R, what you're risking, how much, and where your projections are going to be. Lastly, you always need to look and check if there is any news that may probably affect your trading if you do not check this well. So these are some of the things that you need to check. You need to first confirm before you buy, before you sell in the market, such that you trade profitably. Sometimes we fail not because we don't know what we are doing, and we make losses not because we don't know what we are doing, but because we missed out on some of the key things, some of the basic aspects, and we find ourselves losing. With the interest of time, I'm going to stop from here. Have a lovely day. Enjoy.